All right, here we go. I think we've got some people joining. We will give it till 10:30, maybe 10:31 to get started Pacific time. All right, what do you think? Rachel, Ted, we'll give 30 more seconds. We'll get it rolling.
Yeah, I
That's
say we'll
fair.
give it another 30
Sounds fine to
seconds.
me. Yeah.
All right, let's get into it. Hello, everyone. Ted, Rachel, good to see you guys. Welcome, everyone, to the Demystifying 1099 Employees and Taxes webinar put on by Escalon. This is the Escalon team. Just so everyone knows, Escalon provides bookkeeping, fractional CFO, accounting, full service HR services to early stage and growth stage businesses. We're industry agnostic. We've got our team divided up into a bunch of different verticals across like SaaS, CPG, life sciences, et cetera. And essentially we handle the back office so business owners can focus on what matters for their actual business. So to kick things off, I'll introduce some of our team members. Before I get into that, make sure everyone, if you have questions during the webinar, just dump them in. There's a Q&A function as part of the Zoom. What we will do is we'll start gathering all the questions, kind of filtering through them, and we will get to as many as we can at the end. So feel free to use that as much as possible. Feel free to utilize the chat feature as well. There should be some messages going through there. And then there will be a few polls that pop up as well. But getting started, like I mentioned, the topic today is around 1099 employees or contractors, how to manage those types of decisions as a business owner. We've got Rachel Roybal joining us, who is our head of people ops at Escalon, and Ted Davis, one of our consulting CFOs. Rachel, do you want to give a quick introduction and background?
Yeah, I would love to. Thanks, Mike, for having us. My name is Rachel Roybal. I manage the people operations services for clients at Escalon, and I've been in HR in some capacity for about 24 years. Started out recruiting and quickly moved over to sort of all-encompassing support. I've worked many years both internally in organizations as HR leader or as a client services provider, such as what Escalon provides. So really great to be here. Thanks for having us.
Great. That's great. Thank you, Rachel. And Ted, I'll flip it over to you.
Thank you very much, Mike. My name is Ted Davis. I'm a consulting CFO with Escalon Services. I've been with the company just over 2 years now, and I have come up through the CPA vertical during my career, spent about 25 years plus in the public arena, working with a number of startup companies, as well as those that were in medium and large size situations requiring audits under SEC parameters. It's a pleasure to be with you today to discuss this particular topic regarding 1099s and W-2s type employees. And with that, I'll turn it back to Mike.
Great. All right. Thank you both. Yeah, let's get started. I mean, I think the best way to start, you just mentioned it, Ted, right? We're talking about 1099 employees. We're talking about classifying employees, whether they're full-time, whether they're contractors. Rachel, we'll start with you. Do you want to just give us an overview of why these classifications are important for organizations?
Yeah, sure. I'd love to. So I do think this is a sort of a gray area for many organizations and employers. And sometimes what we see happen is the sort of general classification of everybody as a contractor. It's important for organizations and employers to really know the difference between the two so that they can mitigate the risk to the organization. So really there's a kind of a lot of risk around this area. So kind of high level, employees are entitled to they're subject to certain taxes and they're entitled to certain benefits that contractors are not. So employees, are entitled to things like minimum wage, overtime, employer paid taxes, wellness benefits, paid sick leave, leave entitlements in general. So those would be entitlements that employees are allowed. And then they're also subject to different taxes, federal, state, Social Security, UI taxes, a number of different taxes. And both those entitlements as well as those taxes are not extended to independent contractors. So really, the risk of misclassifying an employee to a contractor really comes from missing both the liability of those taxes as well as the entitlements for the employees. So, when you misclassify an employee as a contractor, then they're missing out on those entitlements. They're not paying into those required taxes. And it can present a risk to organizations, and the risk can include, class action lawsuits. I think we'll chat about one of the bigger cases later in the webinar. Settlements to misclassified individuals, back pay, damages, interest and penalties to state or federal organizations, of course, and attorney's fees. So it can be quite costly to misclassify a contractor or an employee rather as a contractor.
All right, that's fair. Thank you, Rachel. And I mean, Ted, similar sentiment here, just setting it up. Can you tell us a little bit more? What is a 1099 form? Who qualifies as a 1099 worker?
Sure, I'd be happy to do that. Yeah, 1099 form is essentially an annual type information return that's provided to the IRS and to the contractor, itemizing the specific amount of cash payments or in-kind payment situations that have been transacted by the company during a particular year or part year. That's distinguished specifically from the Form W-2, which is provided to employees for their annual earnings and for state and federal purposes, and their itemization of Social Security benefits and other items that are listed on that W-2 form. Those are specifically the two types of forms that are a result of the classification action and the work that's carried out by the employee under their specific responsibilities.
Okay, great. And how does a 1099 contractor differentiate from a W-2 employee?
I think that's a good question. Really, it's a matter of risk, as Rachel mentioned. It's also a matter of three factors that are involved in making this determination. It's a matter of behavior, if you will, in terms of how much control is exercised over the result that is brought about by the independent contractor. And generally, the distinguishing situation here is the independent contractor determines the means, methods, and the how-tos, to accomplish the task. And that's done separately from the employer. Okay, the employer is just concerned with the ultimate result of what the independent contractor produces. And that's contrasted specifically with the employee, where those elements of behavior are controlled primarily by the employer. We also have elements of finances that are involved, and also relationships between the parties. And I think Rachel is going to take an opportunity at this point to describe each of those three items in more detail. I'll turn it over to you, Rachel.
Thanks, Ted. So a couple of things or considerations when you're really looking to determine if somebody is a contractor versus an employee. And I think the first and probably largest consideration is the control factor. So how much control does the organization or the employer have over the person? So that might be how the work is performed, the hours in which they perform the work, the equipment, the training or skill set that's provided by the organization. But generally, in a contractor situation, an employer or an organization would have very little control over that person and the method in which the work is performed. So that's kind of the first consideration. The second consideration really is the Department of Labor definition and tests. So the Department of Labor, of course, is a federal organization, and they look at several different factors when making that determination. So one of them includes that profit and loss factor for the contractor or employee. Does the contractor have or carry the P&L? The amount of time that the worker spends or invests in comparison to what the employer or organization invest, the permanency of the relationship. So is this just a week project, or is this ongoing indefinitely? The nature and the degree of the control, we talked about that already. So how much control does the organization or the employer have over the individual and how the work is performed? And then how integral is the work that the contractor or employee is doing for the company as it relates to their core business offering? And then last would be whether or not the worker uses specialized skills, that maybe perhaps the organization doesn't have or wouldn't be integral to their business. So that's sort of the Department of Labor overview in terms of testing whether it's a contractor or an employee. But it's really important for organizations to understand that states might have different requirements. So there's a handful of states that have more stringent requirements than what the Department of Labor requires. And those include California, of course. We make it very difficult for employers to navigate, but California is probably amongst the most stringent. But we also have New Jersey, Massachusetts, and Illinois. And generally, those states will implement a more stringent test or an ABC test. And really, they consider sort of the same components, but on a much broader scale. So again, the control. How much control does the employer or the organization have over the work, how it's performed, the deliverables? Is the work performed outside of the organization's core business? And, is the worker or independent contractor engaged in that same type of work independently for other organizations? It's a much more, what I would say broad, but I would also say vague test. So you really want to make sure that when you're determining whether or not an individual is an independent contractor or an employee, you're really drilling down into what work is being performed and the manner in which it's being performed.
Okay, great. And we'll get into a little bit more opinions from Rachel and Ted on how to make those best decisions around classifications. But Rachel, just continuing that thought, like what are the risks associated with misclassifying an employee?
Yeah, so I think I mentioned some of those risks early on. So again, it could be class action lawsuits. It could be claims against the organization, the lack of entitlements that the employer didn't extend because of the misclassification. But there's a couple, well, there's a large case that probably we should note here. And several years ago, FedEx was found to have misclassified their delivery drivers as independent contractors. And FedEx is a huge organization. They have lots of employees. And so that misclassification really resulted in a huge kind of win in favor of those misclassified contractors as employees. And in 2016, FedEx settled with those impacted contractors for the misclassification for $240 million. Again, FedEx is a much larger organization. It impacted a lot more individuals, but that's a pretty hefty price tag to pay for the misclassification. So that's one example. Closer to home would be, with a client that I worked with several years ago, many years ago, that was in the medical device and supply space, and they hired they hired pharmacists because part of their offering was providing insulin to diabetic patients. So they had to have pharmacists in their workforce. So they hired several pharmacists. Sometimes those pharmacists were out of office and they needed sort of a on-call pharmacist. And for the on-call pharmacist, they classified those folks as independent contractors because they figured, well, the pharmacist needs a license. This is kind of a slam dunk. Well, it turns out kind of the work for one of those on-call pharmacists dried up a bit, and they weren't getting as many hours or opportunities to earn from that particular employer. They filed an unemployment claim with the state of California and cited that this was their last employer. Well, that sort of opened up the door for EDD to say, well, wages weren't reported for you. You didn't pay into UI, which opened up an audit, and they got nabbed for all of those per diem or on-call pharmacists. And in that case, what we really want to look at is the pharmacist was core, right, to the offering of what the company provided to consumers. They provided medical device and supplies for diabetic patients. So a pharmacist was core to their offering to customers, A. And B, the pharmacist came into their facility and used their equipment and used their systems to fill those prescriptions for customers. So it was clearly an employee relationship and not that of a contractor. But those are some of the risks, right? And so they had penalties to pay, they had the back taxes to pay, and the EDD got into sort of the book, so to speak, right, to make sure that other classifications were corrected.
Okay, that makes sense. Thank you, Rachel. That's great. What I was thinking too is since they were on call, was that company affecting the behavior? Back to what Ted had alluded to earlier, but
Absolutely.
yeah, okay, that's a great example, or two great examples, really. So how do you correct a misclassification? And Ted, maybe I'll let you start with this from like kind of the finance angle of it. You say someone's listening to this webinar right now, they're starting to think, we've got some employees that maybe are some contractors that should be full-time. What's the best way to fix the misclassification going forward?
Well, there's a really interesting just talk about basically three things, and that is you can wait and do nothing as a company, okay, and wait for the IRS to come knocking on your door and basically start inquiring and start an investigation or an examination into your practices. You can obviously go through the preferred method, which is to basically set up a procedure for onboarding both employers, your vendors, and also your employees. And that certainly gets us into a discussion that we'll tackle a little bit later on regarding do's and don'ts. But I'm going to talk a little bit about the whole idea. Let's say you've gone down the road a little bit and all of a sudden you've found out that you've got a misclassification. There is a relief program that's out there as well that's called the Section 530 relief, where you can actually go back to the IRS voluntarily and say, we've made a mistake. We've got this consistent application of independent contractor status, which we want to change. We believe we qualify under their guidelines to be able to grant this relief, and essentially right the situation with the IRS. And that's obviously there as well for the purpose of allowing for self-correction on the part of the company.
Great. Okay. Okay. So there is a path to it. And then Rachel, I know you had some experience with this from the people side.
Yeah, definitely. I think that what's important here is for employers or organizations to really, do what's right. So if the misclassification has occurred, as Ted said, there's sort of three options. My recommendation is always to, address it head on. So if it happened, the misclassification happened, then reclassify the employee, make sure you're, working with somebody to understand, is this an exempt employee? Is this a non-exempt employee? Correct it, get them onto your payroll so that they are subject to those entitlements as well as those taxes. And then work with, your finance professional and perhaps go the route that Ted recommended, which is the IRS 530 plan, and work with the employee. So if there were times that during that misclassification period that they were owed overtime, or they should have, been reimbursed for certain expenses, then my recommendation is always to do what's right, which would be to pay those overtime wages or make the reimbursements.
Great. That's awesome. And of course, anyone on here who's curious, Rachel or Ted could help you with either of those, misclassification corrections, if you'll call it. I'll transition a little bit here away from, the exact 1099 contractor discussion and talk a little bit about vendors. So Ted, I'll start with you. What does a company need to do before making payments to a vendor? Should the company track the payments? How do you kind of, manage that in the appropriate way?
Thank you. Yeah, this is a very important step. It really is. And I just want to give particular emphasis to the procedure for onboarding vendors. And within that category, as well as employees, and within that category of vendors, of making that distinction between vendors where you purchase supplies, equipment, things of that nature versus independent contractors. And let me just mention something, that the definition of an independent contractor is a bit more pervasive than perhaps what you might think. For example, if you're dealing with a legal firm, for example, doesn't matter if it's a corporation or what type of entity they've organized themselves as, professional corporation, professional LLC, whatever, they are going to get a 1099. Attorneys are, and it doesn't matter. Generally, you're going to say, well, do I have to worry about the $600 threshold? The threshold for issuing a 1099 is generally $600 per year. But in the case of an attorney and also a landlord, where you pay that landlord rent, for example, those are the two that come to mind right away. And they're itemized specifically in the instructions for providing the 1099s, that they are universal. I mean, meaning that you pick up every single dollar that you paid to them during an annual period, and regardless of the form of organization that they're involved with, they get a 1099. So that's something to be aware of. But back to my methodology, set up a situation with regard to your qualification of your new vendors, and understand specifically the form W9. Okay, and I think that's universal in this situation. Get the vendor, before you pay them the first time, to provide you a form W9. It's always easier to get it up front in that situation, so you know that you're making appropriate identification of that vendor's that vendor's responsibilities and how you're going to treat them for reporting purposes, W2 versus 1099. And especially with regard to the fact, and let me mention this as well, is that there is a special procedure for foreign vendors. And that's something that I want to just highlight for a moment. If you have foreign vendors, meaning vendors or contractors that are going to perform services for you as part of your software platform or something of that nature, I'm not talking necessarily about equipment purchases, although that they may in certain circumstances apply. But especially if you have royalty agreements or things of that nature or ongoing fixed payments, in addition to services with foreign vendors, please be mindful of that and that they have their own reporting mechanism that does not start with the W-9 form. And the qualification of those vendors really is much more involved than what you would do domestically here in the United States with a W-9. So just be mindful of that. And then be able to go to your software that you're using, and hopefully you're involved in the setup and utilization of a software package for your accounting activities from as early in the history of your company as you can possibly make it, and understand specifically how you qualify those vendors within your software package as either a goods vendor, if you will, a materials vendor, or if they're going to be classified as an independent contractor and receive a 1099. Okay. The check the box technology is definitely out there to make that determination, and that way it'll get it into the proper category for determination later on when you have to file all of those 1099 forms at the end of the year. So that's my recommendation, and don't wait on that, and don't think really. I'm with Rachel on this one all the way. And I've seen clients basically that have come to my attention that have basically decided that they're going to, for the first 6 months of their operations, they're going to treat everybody as an independent contractor because they haven't completed their round or their capital formation activity yet. And then they'll go ahead and switch over. Not a good choice. I would not recommend that either. Just be mindful of the rules and regulations and what kind of transition you're creating for yourself later on when you have to go ahead and go back and do that that changeover, from an independent contractor to an employee, and what Rachel was describing in terms of additional compensation to employees. But that also means that there will be penalties and interest and obligations to state and federal authorities as well for the fact that you've done it incorrectly.
All right, great. Well, thanks. I mean, I think that speaks to a big theme for Escalon, why we exist, right? Do things right the first time. You're planning for your company to grow, so you want to set it up in the way that it can grow without you having to go back and fix things or get penalized for things.
That's definitely something that I want to say at this point, and that is that at Escalon we're fully capable of making those determinations, both from an HR standpoint and an accounting standpoint, and assisting any clients that we have. And for those who are interested, please contact us, and we'll be happy to talk with you about your situation and assist you accordingly.
That's great. Yeah, let us know, and we'll put some contact information at the end of the webinar in the chat in case anyone has questions, wants to reach out. But Ted, just quickly, annual deadlines for filing 1099s. My understanding is that is coming up.
It is, and be mindful of this because it's the same date for 1099s and W-2s. Okay, and normally you're thinking possibly in your mindset that, hey, I've got a couple of months to take care of this. That's the wrong answer. You need to, embed this date in your mind and write it on your calendar. It's January 31st of every year. Those forms have to be turned in early. And it basically starts the entire taxation process so that employees can receive their W-2s, file their personal income tax returns. Independent contractors can get 1099s and be able to comply with their either March 15th filings or April 15th filings as a business. So just be mindful of that as well.
All right, great. Cool. And then, I mean, moving it along a little bit, and Rachel, I feel bad. I feel like I keep putting you in a similar bucket here of asking you about what could go wrong. But what's the best way, say someone's being as proactive as possible. What's the best way for them to protect themselves from an IRS audit or a Department of Labor investigation overall?
Yeah, great question. And I'll kind of revert back to my previous statement, is really doing what's right by the employee, if in fact it is an employee. So I always like to just sort of simplify it. If it walks like a duck and it quacks like a duck and it acts like a duck, then it's probably a duck. And therefore, and like Ted said, is just getting it right the first time. That really is the best protection for organizations to avoid the misclassification risks, the penalties, the fines, and it can go on and on. But really doing it right from the get-go. And I realize, especially with startups, that sometimes it is so tempting to classify all as a contractor. It's easier to administer, but the one time that you get a complaint or a UI claim and you've misclassified, then you've opened yourself up to quite a bit of risk. So really thinking about long-term risk mitigation, getting it right the first time, and then really overall threshold for risk is really how companies should start to think about that so that they avoid those types of audits or penalties. Get it right from the get-go.
I'd also like to add that there are a couple of different ways that that this can come at you. It can come at you by obviously, a simple situation where you file your 1099s with the IRS and you've got 25 1099s and you've got 2 W-2s. Okay, I think that's a clear example of something that's going to be flagged and investigated. So they can initiate a review as a result of your compliance, even though you've got it wrong. Secondly of all, there is a mechanism by which your employees actually can report on their income tax return. It's called a Form 8919, where they can basically give a heads up to the IRS that they feel as though they've been misclassified with regard to their employment category. And so it can come from that mechanism as well. So there are a number of different ways that this kind of challenge, if you will, or mistake can be brought to your attention. And it's not just you knowing about it, but it can come from a number of different avenues.
Really good
Great.
point. Really good point, Ted, that it can come, those flags can come from a number of different areas. Keep in mind, there is data sharing between IRS and DOL. Those are agencies that often share data. And so there is that sort of transparency in the data. So I think, Ted, your point, if an organization has more 1099s than W-2, that's going to raise a flag.
I think also just the element of having your company in compliance in this particular area is a very important aspect as well. Rachel, I think you had a situation with a client where there was an actual requirement for certification by the company regarding their payroll practices. Can you share that with us?
Absolutely. So a lot of times startups, as they start to scale, other companies look at acquisitions or purchases of those startups. And we did have a recent client, or a client that recently underwent the due diligence process for that acquisition. And part of the due diligence was really digging into how many 1099s does the client have? How many employees does the client have? And how many misclass or reclassifications from independent contractors to employees, or vice versa, employees to independent contractors, happened over the last 24 months. And we had to, provide proof of that for the due diligence process. So really good point. It's, it can come up in a due diligence process. It can come up in an audit for certain certifications. But this is an area that a lot of audits pull in to ensure that the company has classified their contractors or employees correctly. Good point.
I've also had a similar experience, although with a little bit different categorization that I'd like to share, and that is that I have seen circumstances and situations in the past where rounds of capital formation, for example, or an equity purchase transaction for two that come to mind. The actual funding organization that was doing the round came in and said, Escalon, we would like you to certify, even though there's no audit. Okay, these were not audited financial statements, so I can say it was a next step down. Would you please not certify, but would you please represent that you believe that the financial statements that you provided are in accordance with U.S. generally accepted accounting principles, U.S. GAAP as we call it? And would you make that representation in writing? Now, start drilling down from that, and you get to the payroll category versus the independent contractor question. And there you have it right there, just like Rachel expressed, is that have you got that question now surfacing and you're at the 11th hour of completing your raise, and you have to all of a sudden backtrack and notify all of the parties involved, your lead investors and so forth, and your syndication and so forth, that you've got this particular problem that has to be corrected. That's an unfortunate circumstance and may cause delays and those kinds of situations at the minimum. But those are some examples, both from Rachel and myself, regarding what happens when the first steps, being the correct steps, okay, are not necessarily adhered to, and how it circles back to basically, really put you in a situation where it forces compliance outside of state or federal circles.
Great, helpful. And there's actually a question in the chat that's sort of related to this, but I'll just share something that I learned in preparation for this webinar that, Rachel, I think it was your point that if you're a founder, you recently started a software company and you hire a contractor that's working on building the core software, that's probably not a contractor because they're building a core product. But spinning it to the question from Rana in the Q&A section, and I might not phrase this exactly correctly, but does the risk for an employee being misclassified only come from the employee? Like if an employee wants to be a contractor, are they allowed to do that?
The short answer is no. Both the DOL and state requirements don't allow for the employee preference. And remember, thinking about those requirements, both the tax requirement as well as the entitlements for employees, those are set in stone, whether it's federal or state. So even if an employee wants to be classified as a contractor, you really should go through those tests to make sure that it's a bona fide contractor agreement, so that you don't have to comply with those regulations that are set in stone. So it's not a matter of preference, it's a matter really of requirement. That said, you really want to consider, in that situation where somebody is requested to be a contractor versus an employee, you really want to consider that profit and loss in that situation. If you are the sole financial source for that individual and they're not engaged in a business that provides that to other clients, thereby getting other resources or financial gain from other clients, then it's likely an employee and not a contractor, regardless of whether they requested that classification or not.
Yeah, I think a good example of that is if the employee approaches the company and says, hey, I'm incorporated, I have a corporation, or I have an LLC that I've set up, I serve other clients, I'm basically paying my own way, I have my own deductions, I have my own taxes and things of that nature already set up. Those can certainly serve as the mitigating reasons for them to be treated as an independent contractor.
Absolutely.
Got it. Okay, cool. And we talked about this a little bit. You guys have both had a bunch of examples, but I'm curious, like, what are the implications of misclassification, or how does this dynamic affect a company's ability to fundraise or speak to investors? I know you guys have had some M&A situations that were, kind of depending on people being compliant here.
I'll tackle maybe the first part, and I'm sure Ted wants to weigh in here too from the finance part, but it can vastly affect the M&A or the acquisition process. So part of that due diligence process is to determine whether or not the acquiring company is comfortable with the risk level. And so they go through all of those questions. So maybe there's not a claim now, but if you've misclassified 10, 20 employees as contractors, that is something that can come back and sort of bite you for over a 3-year period. So really, it can impact that process pretty significantly, which is why it's so important to do it kind of right the first time. In that due diligence process, an acquiring company could go back 2-3 years. And so if you really have that mindset where you just want to classify everybody as a contractor initially, you still have to provide that data to the acquiring company, and then they have to determine how comfortable they are with that risk level. Ted, I'm sure you have a lot to add here as well.
Yeah, let me just start with something that I think everyone should understand, and that is there are penalties, and then of course interest on that if they're unsatisfied, for not complying with 1099 rules. Okay, I'm often asked this question, and I think it's very important to let you understand what the 2024 penalties were for non-compliance with 1099 rules. Basically, if your business fails to file a form 1099 NEC or 1099 miscellaneous by the deadline, that's January 31st, the penalty varies from $60 to $330 per form. So it's a stiff penalty, okay? And the thing about it is that there's also a tack onto that, and that is if the IRS determines that it was willful neglect or absolutely intentional avoidance of this, then it basically doubles. So it's a very, very grim, I think, situation that you would put yourself in if you were not compliant with those particular rules, because if you're a small company that's just starting out and so forth, obviously it would not be appropriate or perhaps even possible to stand that kind of a hit, to your financial resources. The other thing that's important to note is that if you're going along and you're going to have a reclassification situation, there are going to be changes in your books, okay, in your accounting records. They're because you're understating some of your liabilities and your expenses and things of that nature, which is going to impact your overall financial position and performance for a given period. So that's another thing to take into consideration, is that the contingency aspect of this is going to change what your liabilities look like on your balance sheet, for example, and what's recorded in your profit and loss statement. The other thing that I wanted to mention is specifically with regard to capital formation activities. During my experience in doing a lot of capital formation activity, there are certain items that particular investors are willing to basically earmark, shall we say. In other words, yeah, we know this is there. We want you to fix it. That's part of why we're giving you the money and so forth. And they've noted specifically in their engagement documentation that they expect this to be taken care of and fixed. There is also the opposite of that I've seen, that they have been deal breakers, okay, because of the fact that they were not made aware up front. There hadn't been a good contingency assessment and compliance assessment, and I'm going to emphasize compliance assessment on the part of the company before they came to the capital formation group. And so those are some of the ramifications that can certainly take place with regard to downsides. If you want to know, if you want to put it in that kind of a categorization, what are the downsides of non-compliance?
Got it. Okay. I think that is where that belongs. The downsides of it. I've got one last question from the chat that I'd love to get your guys' opinion on. It's about foreign contractors. So can you clarify what reporting is needed for hiring foreign independent contractors? Is the company obligated to send them a 1099? Would they also be subject to the risk of misclassification?
That's a loaded question, Zach. Excuse me, Mike, but I'm going to try to answer that and just let you know that foreign vendors are a separate ballgame. You're talking about section 1441 of the Internal Revenue Code at that point, which basically talks about all of the responsibilities for withholding, on payments to foreign vendors and the reasons why and the different kinds of vendors that are out there. You get into the W8 world, not the W9 world that I just mentioned for US vendors, but you get into the W8 world, which is an array of 5 or 6 different kinds of forms, including annual tax return forms for the kinds of payments that you're making to foreign vendors. So if that's a particular area where you're having work done overseas, part of your programming or something is being done in Mexico or in some foreign country by a company that's recognized in that country, realize that you have to ask the question of, do I have to do backup withholding on my payments because they're doing work in the United States? Okay, and that's what the IRS expects you to do as part of that qualification activity up front to determine specifically what kind of reporting do you really need to get into with regards to your vendor pool. And I want to emphasize again, please be mindful that the rules are different with regard to foreign vendors. Okay, they're more complex, and there is an ongoing responsibility for, even if they had 0 payments, okay, to report that they didn't earn, that you didn't pay them anything, okay, for US tax purposes. And they're going to compare that to essentially to what the company is reporting. That's one of their real enforcement hot topic areas right now, is they're going after backup withholding on foreign vendors.
All right, got it. That sounds extra complicated, but I imagine foreign contractors probably becoming more and more common with your guys' clients, generally speaking.
Yeah, it is something that we're running into more and more in the situation because of the ability to access world markets and world services.
Yep, that makes sense. Well, awesome. Well, that is all the questions that we have for today. Ted and Rachel, thank you again for joining us. And I just want to, do an extra plug here. Ted and Rachel specifically joined this webinar because they're clearly experts on this topic, coming from 2 different sides of it, but sides that I think play pretty closely together. And the timing of this webinar was intentional. And Ted mentioned it quickly, but the end of January is the deadline to file a 1099. So there are email addresses in the chat if you guys would like to get in touch with either of them. If you've got any questions, would like to engage Escalon, or just learn a little bit more about our services, please feel free to reach out. And I'll do a last plug as well. We just ended 2024. Obviously, tax season's upon us. A great way to use Escalon to try us out is using our tax filing services. So again, feel free to reach out to myself, to Ted, to Rachel, if you've got questions or anything like that. But Rachel and Ted, thanks again for joining. I don't know if there's anything that you guys wanted to squeeze in at the end, but
yeah, Mike, I have one thing, and that is we put a link in the end of this because we felt it was important. There's a 2-page kind of summary of what the IRS has put out in terms of qualification of 1099 vendors versus W2 employees and things of that nature, that we've included a link to at the end. And I just wanted to mention that it's a very good recap and summary of some of the things that we've talked about that I think would be helpful to our audience.
Great. Yep, I see that in there now. Feel free to pop that open, everyone. There should be some helpful content. All right. Well, great. Well, thanks again, Ted, Rachel. Thanks everyone for joining us.
Thank you.
We look forward to hearing from everyone. We'll have more of these webinars that are going to be a little bit more informational, so keep an eye out. But thanks everyone. Enjoy the rest of the week.
Thanks everybody. Take care.
Thank you.
Bye-bye.